Hello, Oracles. Well, this was a nice way to finish the week off. We finished green in the S&P and the NASDAQ and Tesla. S&P was just barely green, NASDAQ was up 1.4%, and Tesla was up 1.7%. So again, we're kind of in uncertain territory, but to get a green day is just a nice feeling to have with everything that we've had going on. So why was it green today? Well, normally going into a long weekend, and just a reminder, the markets are closed on Monday for Juneteenth. So normally going into a longer weekend, we usually see a little bit of a sell-off because it's a long weekend. A lot of things can happen over the weekend. Sometimes people who do swing trading choose to keep the money on the sidelines because they don't know what's going to happen on Monday. So normally we see that, and we did not today. That's partially because we saw oil prices falling $7 today. This is huge, and we just talked about it yesterday where, oil prices coming down are going to signify inflation coming down, which is in turn going to signify a more dovish Fed in the future. So again, this is just one day, $7. Things can turn around, but it is a great sign, and if we can continue the oil coming down, I think we can continue to see the market going green. And other prices that are coming down, we had notification at my job today that steel prices are coming down significantly for a couple of our vendors. So this is huge because one of our vendors is a massive dealer when it comes to wire mesh for buildings, and their prices have come down dramatically over the last couple of weeks. So this is a good sign moving forward that their supply is picking up and they're pulling their prices down, which in turn is going to bring everybody's prices down, at least for these commodities. So perhaps between that and oil coming down, if we can stay on this path coming down, we will then see the inflation turn around. Now, it's going to take a little bit of time, and then we're going to need to get the CPI data again on top of it to reassure us that yes, these are definitely coming down when it comes to prices and inflation. So could still take a little bit of time, which is why I'm saying we won't see a true V-shaped recovery. But when you see the oil prices coming down, we saw the stock market going back up. This is what's going to go hand in hand. So if we can continue this trend, we should see the stock market coming back up. If oil does continue to come back down, that could signify that we have hit a bottom. So it sounds like a lot of people in the news, a lot of people on TV, many analysts are anticipating a little run going on in the future. So we might see a week or two of a run going into the end of the month. Again, I don't know, but it sounds like many people feel that this is what's going to go on. We have kind of, I wouldn't say certainty or clarity, but we don't have as many questions right now until the next CPI data. And if oil can come down, at least that's answering the question of when is oil going to come down? So we're starting to move in that direction. We're starting to get a little bit of volatility coming down. The VIX is at 31 at the moment, so volatility is moving down as well. All good signs pointing to potential green, at least in the near term. And so even with all of this good news going into the end of the week, I still don't know what the future is going to hold. Still a lot of uncertainty going forward. So I'm adjusting my dollar cost averaging just a little bit. Not much. And I had mentioned it the other day, there's a few stocks that I've been dollar cost averaging into, and I'm going to stop those when they get to a certain point. So like, for instance, Square. I have 4 and a fraction shares of Square. Once I hit that 5th share, I'm going to stop, and I'm just going to put that money into cash. When it comes to crypto, I have stopped adding. I have a very strict balance that I'm going to follow now. Crypto I kind of let go loose, but I set crypto to 5%, so that's been kind of dwindling down, so I just slowed down my adding to it to let the rest of my portfolio balance off to it. Tesla I have set to 69%, I'm currently at 62%, and cash I usually leave the bottom at 5% and the top at 10%. I am building that up to 10%, and then anything over 10%, I'm going to add that into QYLD. QYLD is a high dividend stock that I am in, and it gives about 10 to 12% yield for a dividend. So this is significant. So I'll be adding extras into that because getting a kind of return like that in a market that we're in is really one of, to me, in my opinion, one of the best places to put my money to actually get a return. And also, as I had spoken about yesterday, if you are a swing trader type of person, this might be the time. Earlier in the week would have been better, but it's hard to time the market and know when these things are going to happen. But if we are anticipating a run for the next week or two, could be time for a short swing trade. If there's something that you like that you think is going to do well over the next couple of weeks, maybe put a little money into it, make yourself some profits. Again, this is a risky move, something that I'm not condoning, something I'm going to look into myself if there's something that I really like. Otherwise, I'm just going to wait it out with the strategy that I'm doing, because I really don't see many things out there at the moment that I want to take the chance on. But if you guys do, now might be a good time. And now looking at the charts with Tesla in particular, looks like we are forming a very nice wedge pattern. When it comes to wedge patterns, this is a bullish signal, could be a bull flag as we have talked about in the past. So when this forms, it's like a nice little wedge that comes down. And usually when we get to the point of that wedge or the tip of the flag, we are either going to break out or break down. And so looking at the way we've been going all year, every time we've had one of these moments for Tesla, we have broken down. So that's just the kind of market that we're in. So I'm not going to, have my hopes high for this one to break out. But seeing as we are in a wedge pattern and we have a lot of anticipation for some green over the next 2 weeks, we might actually see a short breakout. Maybe we see Tesla over $700 next week. I do know many of you do some swing trading in your IRA or you play options. So, just take a look at the charts and see where you're at for those, because could be a good opportunity to maybe buy some now to swing out of later. Again, do your own research on this to make sure that it's right for you and it looks right, like you're going to make some profits on it. But just looking at the charts alone, for me, this might be a time where I would look at buying in with my IRA around the 650 mark. And then if we do end up pulling up to 7 or 750, might swing out of those to make some profits and then buy back in later, because again, with the uncertainty in the market, we may very well pull back going into a very weak Q2 for earnings across the board. And if you are a long-term investor versus a swing trader, Ron Barron had mentioned how these times right now are an amazing buying opportunity for long-term holders. And so this is, mainly what I do. Every once in a while I've got a swing here and there. But for me, this is why I've been dollar cost averaging. And some people say to hold the cash. But the reason I'm doing it is because some people are saying these are great buying opportunities. Other people are saying hold cash. Nobody knows what's going on in the future. So I play this balance with my dollar cost averaging where I'm adding to cash just in case we do crash down, but I'm dollar cost averaging just in case we don't. And I was talking to one of you in the comments about, holding cash is fantastic because, when you're multiplying your gains, you can go from, a 5 to 10 ratio to a 5 to 20 ratio when you're multiplying your stocks. But for me, instead of doing that, I could do like a 7 to 20 ratio because I'm in the middle. And sure, maybe I don't get the bottom if we keep on crashing further because I've dollar cost averaged into it. But if we go back up, then I'm stuck with less gains because I had so much cash sitting on the side and I bought higher. So again, we don't know what the future is going to bring. Many of you have been right about it all along from the beginning of the year, saying we're going to crash even further. So you've got to do your own due diligence and research as to what you feel is best for you. And for me, playing it in the middle, I'm not looking to time it and find the bottom. So dollar cost averaging ensures that I'm going to find somewhere near the bottom, and I'll still have cash on the side. So when we do hit the bottom, I can add more to keep buying more at the bottom before we come back up to bring the cost basis down of all of my investments. And one thing I will be paying attention to over the long weekend is crypto, because crypto for most of the year has been a leading indicator. There were some times and some phases in this that it was not, but this whole entire week, crypto has definitely been a leading indicator. We saw it crashing over the weekend last weekend, and then sure enough, we saw the stock market crashing going into the FOMC meeting. I'm sure most of that had to do with the CPI data that we got last Friday, but looks like crypto is kind of a leading indicator again. So I will be monitoring this over the weekend to see how it trades, because that may indicate how we will be trading Tuesday when the markets open again. Let me know your thoughts in the comments below. What do you think the next 2 weeks of trading are going to look like into the end of this month? Do you think we are going to get this nice little rally that a lot of people are talking about? Or do you think we're going to get faked out and pull down well before then? Let me know your thoughts. I do think that we are going to pull back after whatever rally we do get, but let me know how long you think that is going to last. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is in the description. And if you'd like to support the channel any further, I do have a Patreon. That link is also in the description. Thank you so much. Have a great one.